Hey, good morning. I'm with Earl Salter of Pacific Financial Exchange, and Earl is not just some tax guy I brought in off the street. He is Southern California's premier tax advisor when it comes to apartments. I asked him to come in today because there's a lot of talk about taxes going on. Okay, Earl, this is what I want to know. Right now, let's just say an apartment owner bought his building, let's say in 1985. He bought it in 1985 for $400,000, okay? Holds it for 27 years. We're now in 2012, 2013. He bought it at $400,000, and just to use round numbers, sells it for $1 million. So, you got that? $400,000, $1 million. Now, what I want to know from you, Earl, is right now under the current tax code, what's his state and federal bill going to be? And then what's it going to be, your best guess, if the Obama administration gets their way tax-wise? So try to keep that simple that way.
Great question, Jim. Right now, if it's $400,000, the basis is probably $100,000 due to the depreciation, which means his gain is going to be approximately $900,000. The tax on that between federal and state would be approximately 25%, which equates to about $225,000. That's a pretty big nut to crack. In the new laws that we think are going to be passed sometime in the early part of the year, that rate could go from 30 to 35%, combination federal and state. So combination federal and state could go as high as 30 to 35%, which means that liability could be as much as $315,000 on the same transaction that this year is $225,000. That's a $90,000 difference. That's a lot of money to have to pay taxes on.
Let me stop you. In that scenario, you sell under the current tax rate versus the new Obama rate. You're talking about a $90,000 increase. If you don't do an exchange, you just sell and pay your taxes.
That's correct. That's what you're looking at. We also may have an increase in alternative minimum tax. We're definitely going to see some tax increases because that's the Obama package, is to increase the taxes, and not necessarily the wealthy, but those people that sell property and have a substantial capital gain, their tax liability will go up not only on capital gains but on other items also.
Okay, so if you're watching this and you're thinking about selling, isn't 15% the lowest it's ever been?
15% is the lowest capital gain rate. It could be as low as 10% if they're in a very low tax bracket and have no additional income. It could be lower, but that is going to be bygones. We're not going to see that rate again.
So guys and gals, if you're watching this and you've been thinking about, well, what are the signs for me to sell? This is it. You're never going to see taxes this low on capital gains for the foreseeable future.
Well, that's true, and we also have lower interest rates right now, which people that want to purchase your property have a definite incentive to go out and purchase the property also.
You need good tax advice. Call Earl. So I want you to know, if you're watching this, if you have questions on what's going to happen, call Earl. Earl, what's the best number to get hold of you at?
Best number to get me at, Jim, is area code 562-863-4808. Or you can email me at earlmsalter@gmail.com. And I'll do my best to answer your questions over the phone. If I don't think we can do that, then you need to come in and talk to me. Bring a copy of your most recent tax return. I deal with other accountants, CPAs, and enrolled agents, which that's what I am as an enrolled agent. I deal with other attorneys involving real estate transactions also.
But this is an expert on apartments, knows apartments. I've trusted him for close to 30 years now. So anyway, thanks for coming in, Earl. I appreciate it.
Jim, thank you very much.
Thanks for watching.
Oh, life could be a dream.